MoneySkills4Life. You can also visit my website at www.moneyskills4life.co.za. Important concepts: saving, investing, speculation. I do believe that it helps to understand the concepts, and when you have a sort of definition of what you are working with, it makes decisions easier. We use financial terms very loosely and often end up where we don't want to be because of that. And sometimes I think some people deliberately use these terms loosely in an effort to take us in. Today we will look at 3 important financial concepts that we need to master if we want to build wealth: saving, investing, and speculation. Before we start, please consult with a knowledgeable advisor before you start changing your portfolio. Mistakes can cost you dearly. Wealth always starts with saving. If you do not save, forget about wealth. Saving is spending less than your income. Saving is building capital so that your money can work for you. Saving is by definition short-term and low risk. Usually the risk to your capital is minimal. You earn interest, which is also very low, and that is why you do not want to put all your money into savings. Why do we save? Protection against unforeseen expenses, for a specific goal such as a holiday. Savings are liquid, and because of the low capital risk, you can easily and quickly access your money when you need it. Traditionally, we were advised to save about 3 to 6 months' income, and since you will need this money immediately when you do need it, access to your money is important, and then you do not want a capital loss. A typical form of saving is a bank account. Investing. Investing is a medium to long-term activity. This is where we really start to build capital, and where we have more risk than a savings account. There will be capital risk. Since we are now active in the real economy, we are taking part in business. Therefore, the risk of losing the capital is higher. If you buy shares in a company, you always run the risk that the company can go bankrupt, or that it may hit a financially difficult spot and the share price drops. Naturally, it does not mean you should not invest. It does mean you should be careful and be involved. A typical investment gives you capital growth from the shares in a good company or a building, and you earn income from dividends or rent. If you invest for the medium term, your investment horizon is 3 to 5 years, and you should choose your investments accordingly. When you invest long-term, the time frame is 5 years and beyond, and you have to choose investments for this time frame. You do not invest money you will not need to pay essentials, such as school fees or regular expenses, because there is an inherent risk, and you do not want to mix short-term and long-term goals. Typical investments are shares or stocks and property. Speculation. Speculation is risky business. It is quick. Often you deal in minutes, although it could also be much longer. Typically when you speculate, you buy and sell. Although wagering money on a sports game is also a form of speculation. The idea is to buy low and sell high, or even to sell high and then buy low, which means you are selling something you do not own yet. You make money because of changes in supply and demand, or just because of volatility in the price. Perhaps it is easier to understand if I say, when you speculate, you are betting on a price movement in the asset you are speculating with. For example, if I think the shares of company XYZ is going to increase by 20% within a week, I would buy it so I can sell in a week and make a profit. Never, ever speculate with money you cannot afford to lose. There are a lot of rules pertaining to speculation. You break any of these rules at your own peril. Therefore, limit your exposure and what you can lose. Speculation is also called trading, and sometimes it is called gambling. A typical form of speculation is Forex trading. What is the takeaway? There is a difference between saving, investing, and speculating or trading. Understand the difference and know what you are doing. Before you part with your money, ask yourself, what am I doing? Am I saving, investing, or trading? Is the instrument I am using in line with the definition? Are you trying to save in Forex, for instance? Or are you trying to invest in a bank account? Later we will learn more about this. Never trade when you should be investing. Whatever you do, understand the risk and protect your capital. Thanks for watching. Please subscribe to my channel to be notified of new videos. Until next time.